Hello, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 9th of June, 2008, and the market's closed. We had a pretty volatile session here. I'm showing a red candle, but the S&P 500 actually finished with a gain of 27 cents. But it seemed like the better opportunity, at least from my trading perspective, was on the downside here today. We saw that, again, Friday we had a failed move after Thursday's, that is Thursday's move failed to hold. Sellers came in Friday, pushed the market below that 137.5 level that we've been watching. And when we look at a short-term time frame here, let's start with this 30-minute time frame. You can see that, and I posted several charts of this during the course of the day on the blog at Alpha Trends. That I was thinking that a rally would bring it up to the 137 to 137.5 level. You can see here it was about that prior level of support that did act as resistance, and from there we saw the market just kind of trade sideways in here on a diminishing volume, and then the sellers came back in with a nice fearful move lower. And I say a nice fearful move lower because it was the easier trade today to participate in. On a break below that, the market was showing these lower highs and then a more frequent test of support in here. So it showed this little descending triangle. It broke down through there, and then we saw a real give up. But late in the day, we did see some recovery, and it's back up towards that 137. I think that the only reason that I would become mildly bullish about this market would be a move back above 138. It's going to remain, I think, pretty volatile in here. We've had a large sell-off, and the market's trying to stabilize in here, but we have such an important level of prior support near that 137 and a half level that again completes this head and shoulders pattern, that we have the potential that this is the beginnings of a much larger breakdown that could lead to, as I said on Friday, I'm just drawing some trend lines in here to show the the trend line break and the importance of where we are. But the height of this pattern from 137 up to the top of the head is 7 points. You subtract that from the neckline break area, and that would indicate a test of about 130. As I said Friday, nothing goes straight down. Obviously, there'll be levels where it bounces and areas that are defended by the buyers, and perhaps 135 is one of those areas. But looking at the 1 minute time frame, you see that we saw this choppy action with lower highs in here today. The market had found a little bit of support at about 136.80, and when that broke at about 115, and keep an eye on the markets around 1 o'clock. A lot of times that's when these larger moves have been occurring, right about 1 o'clock the last several weeks. In fact, last Thursday's big rally occurred right about 1 o'clock. Well, today's sell-off occurred right at about 1 o'clock. It brought the market down in this 1 minute time frame. A pattern of lower highs and lower lows developed, and then you saw that the buyers took back control here temporarily, and then it just kind of sideways, but did close back above the daily VWAP. As far as the average price of the last 2 days is right up there at about that 137 level, and that further adds further significance to that level. We saw that today's high was just about 137.50. I didn't see the exact print in there, but it was pretty close to where you would have expected, and the level that we were looking for the bears to likely defend, as I had mentioned on Friday. So we've got a pattern of lower highs and lower lows, and you've got to respect the risk in that. You have to recognize that the path of least resistance on this daily time frame is lower. We've got lower highs and lower lows, and it's broken down through this important support, so you have to really pay very close attention to that and be looking for bearish setups. And there's a lot of volatility in this market that makes it just a very good trading environment, and it continues to be more of a trader's environment. Be prepared for anything. Don't get locked into a belief that I thought last Thursday the market was looking pretty good. Well, things change quickly, and you can't be locked into one belief, bullish or bearish, for too long when you have this type of volatility. Learn to listen to the message of the market and decide which time frame you're most comfortable trading on. For me, in this market environment, I think that the best trades come from the 10-minute time frames on down. But you always have to keep the larger time frames in perspective, and just kind of give you an overall guidance of where this market is and what the potential is. When you look at the financials back down to $23 a share on the close today, and intraday we saw they had gotten down to $22.60 or so. The Bear Stearns lows were right here at 22.29 intraday, where they opened that day. So this is the lowest close I think that we've seen. What was this close here? Was 23.63. So clearly it's the lowest close we've seen all year, and the financials remain in trouble. There's a lot of headline risk in there. Picking bottoms is one of the most difficult jobs, and that's why I don't try to attempt it. So I still think you got to stay away from the financials. It's starting to get bigger volume, which might indicate maybe we're getting towards a turning point, but it's not a reason to buy, in my opinion. I mean, volume increases all the way down. Volume increases in the path of least resistance, and then you get the low volume, counter trend moves. But the financials clearly still in trouble. If they don't scare you out during here, it's probably going to take a long time for this market to heal through time. So I'd say stay away from there. The Russell 2000, I've got these lines still in here from Friday, but this is this uptrend line that that shows that we're still clearly in an uptrend. You could maybe draw another one right here and say that line was tested here today. So the market does remain above its rising 50-day moving average, and clearly we've got a stronger picture here, although we did have a failed breakout past the 200-day moving average. That's something to be aware of. We don't have a real strong deterioration in this market yet, although considering where we are in this weekly time frame, the large volatility in the failed move at the prior break of this prior support does indicate there's a possibility of a much bigger move developing. So continue to be very careful in this area. 75 looks like it's going to be a very important level going forward here over the next couple weeks, as far as if the market can get back above there, maybe there's a recovery. But right now, nothing suggests more than a trading bounce. We've got a declining 5-day moving average, this 10-minute time frame. You can see that we had the same pattern in here, low volume in this area, followed by a large volume breakdown. And looking at the 1-minute time frame, we did see the buyers take back control for the day. However, they were unable to push it back. Well, it came right up to about where the main breakdown point was. But the average price over the last 2 days since we had this weakness was about 74.17. In the last 3 days since that big move up here, we've got a bigger level of people trapped, actually around 74.5 is the way that I look at that. Realistically though, this is going to be an important area, near about $72 a share. Breaking below and staying below 72 would likely lead to a larger move lower. There's nothing here that indicates that's due to occur basically in the next few sessions. We're going to see, I think, some continued volatility, and it's going to favor short-term trading. If you're not comfortable with short-term trading, then perhaps it's best to stick to the sidelines and have your money safely in cash. At least you're not going to lose anything there, rather than risk getting chopped up if you're not quick enough to be a short-term trader. The NASDAQ 100 did break this trend line, this uptrend line that's been holding it. Now, a trend line break doesn't always mean that the market will reverse, but it is a very good early warning indicator that says at least the rate of change has slowed down. And now we've got this trend line break, but we don't have a pattern of lower highs and lower lows right now. The more important level of support for this market is about that 47.75 area, and breaking below and staying below that level would be where the problems are developed. But you can see that the market did find support at that area today. We do still have a rising 50-day moving average, so it's not all bearish in here. A lot of people want to pick the top in the NASDAQ, but I don't think it's quite there yet. I think that there's a possibility that one's developing, but it's too early to say this is a top in the financials. Maybe we get a bounce up towards this 5-day moving average near about 49.5. We did have some strong buying in here late in the day that saw it clearly take out the daily VWAP, and as far as the 2-day average price up near 49. 3-day VWAP was up near about $49.30 or so was the average price since that failed breakout last Thursday the 5th. So we have this looking like maybe it's starting to stabilize a little bit in here. So if you're aggressively short, be careful and look for maybe a little bit further bounce in here, but I think a bounce will likely provide an opportunity in some individual stocks to look for candidates that may begin to weaken again and present better opportunities on the downside. Again, I'm going to repeat what I finished up the video on Friday with, which is we're in a high-risk environment, and when that occurs, you want to slow your trading down, be more selective, be quicker to admit when you have a loss, because they can really spiral out of control. And if you don't manage risk and keep your time frame shorter. And again, like I always say, risk management is job number one.